Everybody loves cash flow. In fact, I think the only thing better than cash flow is cash flow every single month. So in this video, we're going to be reviewing 3 monthly dividend paying stocks that you could use to pay your rent. So let's go ahead and jump into it. The first monthly paying dividend company that we're going to be looking at is Stag Industrial, stock ticker STAG, currently trading at $34.40 per share. This is a company that is actually a real estate investment trust. It operates within 41 different states, has about 561 different buildings with over 111 million square feet. The company has a pretty nice starting dividend yield, sitting at around 4.27%. Now, something that's really interesting about this company, it has outperformed the market. When you look at the total return over the past year, you can see 10.94% compared to the S&P 500's 8.65%, and over the past 3 years, it's outperformed the market by even more, 60% versus the 49%. Over the past 5 years, it's a little more even, but the point is, this company has seen really nice returns, especially when you compare it to the returns of other REITs. Now let's go ahead and dig into the dividend metrics a little bit more. Like we already mentioned, the company has a nice starting dividend yield of around 4.3%, annual dividend payout of $1.47. Now the payout ratio is showing 148%, which is typically not sustainable, but that's actually not the best way to judge the safety of a dividend payout from a real estate investment trust. And we'll talk about that in just a little bit. Now you can see the 5-year dividend growth rate very low, under 1%, but if we look at the dividend growth, we can see it looks like they have been slightly increasing their dividends over time, just very slow. So if we look at that dividend history, 11 straight years of increasing dividend payouts. Now this company has not always been a monthly dividend paying company. You can see back around 2013, they used to pay out quarterly, but since then they have paid out monthly, and you can see there have been slight dividend increases over that time period. If we scroll down even more, we can see it looks like their most recent monthly dividend payout is around 0.1225. A year ago from this time, it was 0.1217, and that slow dividend growth has been consistent over the past few years. Now, I want to know if this company is trading at a good value, so we're going to jump into my real estate investment trust valuation spreadsheet, and we'll look at a few different valuation models like always. If you'd like to be able to download any of my spreadsheets, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and plug in the stock ticker STAG and hit enter. And you can see all of this data will go ahead and load in. We've already talked about the dividend metrics. If we come over here, we can see analysts currently have a target price of $37.05. Institutional ownership pretty high at around 88.4%, and the beta is sitting very close to 1, so the volatility should follow the market pretty closely. Now, the first valuation model that we do want to look at is the multiples valuation, and with a real estate investment trust, we use a price to AFFO multiple to value the company, and you can see we're looking at comparable companies right here. These are basically companies that are similar in structure to Stag Industrial. So for the most part, these are also industrial REITs. Now the average price to AFFO multiple for these comparable companies is sitting at 28.96, while Stag's price to AFFO is sitting at 17.38, which is a little bit of an indicator that this company may be undervalued. When we plug it into our model, you can see the formula here. We come to an intrinsic value of $57.25. Now, the next valuation that we're going to look at is the historical price to FFO multiple. Basically, the reason we look at this valuation model is because it tells us how the company is valued right now compared to where it has been historically. So basically what I've done is I plugged in the historical price per share right here and the historical FFO per share right here, so we can see our historical price to FFO, and it's also charted out right here. Now, FFO per share is an extremely important metric for 2 different reasons. Obviously, we want to see growth in the funds from operation, but FFO is also going to tell us if we're getting diluted with our shares outstanding. So I did a quick calculation out here. Basically, what it's showing us is the growing funds from operation, but we can also see that the shares outstanding has been increasing by quite a bit, so our shares have been diluted over this time. But when we plug these together, we get our FFO per share, which I plugged in right here. Now we can see the current price to FFO is sitting at 15.27, and the average price to FFO for this company over the last decade sitting at around 16.12. So it is slightly below where it's been historically, another indicator that it could be slightly undervalued. Now the next valuation model that I do want to look at is the dividend discount model, a very important valuation model because it values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So what I've done is I plugged in the monthly dividend payouts over the past 4 or 5 years so we can see how much the company pays out each year. This allows us to see our year-over-year dividend growth rates, and it looks like each year it's below 1%, around 0.67 to 0.75%. So the average growth rate around 0.69%. Moving forward, I'm projecting a growth rate of about 1%, discount rate of 8%, and that gives us a dividend discount model price per share of just $21.21. Now, the last valuation model on this spreadsheet is net asset value, but I think there's a lot of variables that can be hard to find, so it's not always the best valuation model, so I don't typically use it in this scenario. So when we jump over to our output tab, we have our two valuations listed right here, and when we average them together, we come to an intrinsic value of $39.23, a little bit below that current trading price, meaning the company might be slightly undervalued, which also was reaffirmed by what we saw with our historical price to FFO valuation model. With a 10% margin of safety, it looks like our acceptable buy price for the company is sitting at around $35.31, meaning now could be a good time to consider this company. With a 20% margin of safety, the acceptable buy price is sitting at around $31.39. But also, anytime you look at an industrial real estate investment trust, you do need to remember that that market can be cyclical, so that is a potential risk. But overall, this company's performed pretty well over the past few years, has a nice starting dividend yield, and pays out dividends every single month, so it's worth looking into more. But let's go ahead and look at our next monthly dividend paying stock. But first, a quick word from our sponsor, NordPass. A recent 2019 study found employees spend 11 hours a year resetting their passwords. How often do you or your colleagues keep passwords in notebooks or sticky notes and scattered spots on work computers? What would happen if you had to wait to get access to certain accounts when the main account holders are sick or off on vacation? Thankfully, today's sponsor, NordPass, can fix these problems. With NordPass, you can store and access your online accounts from anywhere. You can get a 3-month free trial to NordPass when you use my link in the description and use code DIVIDENDology. NordPass can be your all-in-one digital life manager. It allows you to make payments and purchases without delay, keep sensitive information updated and safe, share access between teams to make collaboration easy, implement strong passwords by default, and my personal favorite feature is that NordPass can detect your data breaches early. NordPass is the perfect solution to protecting and managing your company's digital wealth. You can get a 3-month free trial to NordPass when you use my link in the description and use code DIVIDENDology. The second stock we're going to be looking at is probably the most popular monthly dividend paying stock, and that is Realty Income Corporation, stock ticker O, currently trading at $60.09 per share. Again, this is another real estate investment trust. Really nice starting dividend yield sitting at around 5%. Let's go ahead and dig into those dividend metrics a little bit more. We'll scroll down, we can see dividend yield sitting at around 5%, annual payout sitting at around $3.06 per share, 5-year dividend growth rate 3.76%, so not a super high dividend growth rate, but it is a little bit higher than what we saw with Stag. But this is what's so impressive for this real estate investment trust, dividend growth of over 26 consecutive years. So let's go ahead and look at that dividend history. We'll scroll out and look at the math so you can see those monthly dividend payouts growing consistently over time. Now, a huge focus for this company is making sure their portfolio consists of very strong tenants, because obviously a REIT is only as good as its tenants. So we can see some of the industries that a lot of their tenants are in are going to be grocery stores, convenience stores, and dollar stores. And if we scroll down even more, we're going to see a lot of recognizable names that their tenants are. We have Dollar General, we have Walgreens, Dollar Tree, we have companies like FedEx, LA Fitness, we have CVS Pharmacy, Walmart, Lifetime Fitness, AMC, Lowe's, Kroger. So a lot of their tenants are very popular and strong financially, which is great for Realty Income Corporation. And we can see, if we jump back over to Seeking Alpha and look at the summary page, over the past year, they're down about 11%, but over the past 5 years, somewhat okay returns, up about 18%, and over the past 10 years, up around 24.9%. But keep in mind, a lot of the returns you're going to see from this company are going to come in the form of dividends, which is not represented in this chart. So let's go ahead and jump over to our REIT valuation spreadsheet, see if we can find the fair value for Realty Income. I'll plug in the stock ticker and hit enter. And like we've seen, dividend yield sitting at around 5%. Now again, payout ratio showing around 208%, which under a normal stock, that would not be sustainable, but this is a real estate investment trust. So really what we want to look for is, if we go over to dividends and click on dividend safety, we want to look for that AFFO payout ratio. This is a much more accurate representation of how safe those dividend payouts are. And we can see it's sitting at around 76.24%. So it is somewhat high, but those dividend payouts are still safe. Analysts currently have a target price of $69.73 per share. Institutional ownership pretty high at around 83%, and a beta of just 0.81, so fairly low volatility with this stock. Looking at the AFFO multiples, again, you can see the average price to AFFO for these comparable companies is sitting at 16.27. For O, theirs is sitting at 15.41, so it's possible it's slightly undervalued. When we plug this into our valuation, we come to an intrinsic value of $63.44. when we look at the historical price to FFO, I'll go ahead and zoom out just a little bit. We can see that the current price to FFO is sitting at 14.87, and over the past decade, the average price to FFO is 18.7. So you can see it's come down quite a bit over the last couple of years, again indicating it could be slightly undervalued. Now let's look at our dividend discount model. I'll zoom in just a little bit, but again, I plugged in the monthly dividend payouts over the past few years, so we can see those dividend increases. We have 3%, 5%, 0.81%, and 2.82%. So not super high dividend growth, but it's decent for a real estate investment trust. Moving forward, I'm projecting a growth rate of about 3.75%, discount rate of 8%. This gives us a dividend discount model price per share of $74.70. So when we jump over to our output tab, you can see we came to an intrinsic value of $69.07 after averaging our two valuations. And this is also in line with what we found with our historical price to FFO valuation model. So when we apply a 10% margin of safety, our acceptable buy price is around $62.17. With a 20% margin of safety, our acceptable buy price is around $55.26. And if we jump back over to Seeking Alpha, we can see that within the past year, the company has traded as low as $55.50. So there have been opportunities to add this company at a somewhat decent price. Now, the last monthly dividend paying company that we're going to be looking at is not an individual stock. It's actually not a real estate investment trust either. It's a business development company. It's Main Street Capital, stock ticker MAIN, currently trading at $39.26. So what is a business development company? Well, it's a type of closed-ended investment company that invests in small and medium-sized companies. And like real estate investment trusts, BDCs are required to distribute at least 90% of their taxable income to shareholders. So because of that, a lot of the times we see higher starting dividend yields with this company, and that's the case in this scenario as well. We have a starting dividend yield of close to 7% with Main Street Capital. We can see pretty good returns as far as share price as well over the past year, up about 5.76%. Over the past 5 years, around 5.25%, and over the past 10 years, up about 47.63%. And again, you do have to keep in mind, most of the returns are going to come in the form of dividends, which is not represented in this chart. So let's go ahead and jump into the dividend metrics just a little bit more, like I just mentioned. Starting dividend yield of around 7%. We have an annual payout of $2.70. We can see a little bit of dividend growth as well, around 2.87% 5-year dividend growth rate, and a 2-year history of increasing dividends. If we jump over and look at this dividend history, you can see it's a little bit shaky, but for the most part, they do pay out dividends every single month, and those dividends have been increasing ever so slightly. This is actually a position that I used to own in my personal dividend portfolio, but I sold out of it because of its lack of dividend growth. With my personal investments, I'm really looking for companies that are going to increase dividends at a pretty large rate year over year. But there you go. Those are 3 companies that pay out dividends every single month that I think are But there you go, those are 3 companies that pay out dividends every single month that I think are digging into just a little bit more. If you're someone who's looking for monthly income, these are definitely great options. But there you go, those are 3 companies that pay out dividends every single month. Again, I'd like to say thank you to NordPass for sponsoring this video. If you'd like to try out Seeking Alpha, I have a huge discount at my link in the description. Also, you can download my spreadsheets on my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.